Hi, everyone. My name is David Kosmeter, and I'm TimingResearch.com. This is the Crowd Forecast News, episode number 126, or I'm sorry, 162 for November 20th, 2017. Today we the 217 weekly reports, which you should be seeing on your screen right now while I'm talking. If you haven't had a chance to, you can go to TimingResearch.com and download it there. For those watching live, I do have the live chat section open on the YouTube page, so if you have any questions or comments during the show, just type them in there. Back to moderate today, so I'm going to go ahead and turn it over to him.
All right. Thank you, Dave Kosmeter, and thank you to Timing Research for having me back once again. Barry, let's go to you first. Barry Rosen of FortuneCast.com. For those of us who don't know you, tell us a little bit about yourself and tell us a little bit about FortuneCast.com. Barry?
Hi, can you hear me okay? I just put on the headset.
Yeah, we hear you great.
Great, okay. So FortuneCast has been, and we're been around since 1987. We've actually focused more on commodities, but about 15 years ago, we kind of branched into ETFs, and just about everybody's only interested in the S&P, and so we focus on that, obviously, in great deal with long-term timing, short-term timing. I'm a cyclist. I use 5 or 6 different types of cyclists, and I combine that with Elliott Wave. And the Elliott Wave usually keeps me out of trouble because if the pattern isn't complete, then I'm kind of waiting. I'm not getting caught up in top picking and things like that. So we were ranked number 1 the last 2 years in gold timing by Timer Digest, and I think last year we were number 4 or 5 on S&P timing. So we've gone the distance, and we're around for a long time now.
Cool. All right, Michael, let's go to you next. Michael Filighera of LogicalSignals.com. Tell us a bit. Well, you know the routine.
Hi. Good afternoon for those on the East Coast. Good morning for those on the West Coast. I'm Michael Filighera. I'm with Logical Signals. That's my website. I have been trading since 1979. I was a market maker on the Pacific Exchange, and I've traded in San Francisco. I've traded in London, Amsterdam, and Germany, and then came back to San Francisco. I'm now happily retired, quote unquote. You're never totally retired if you're a market trader. It has that. In any case, I still do focus on options, but primarily I've shifted over to trading futures. And so
Okay, is he frozen just to me or everybody else?
Overnight.
Also frozen here, yeah.
Okay. So then, yeah, that's about it. We day trade, and I'm probably going to start expanding back out and including options, simply because, as Barry is making reference to, I think that work out there, including some that I do, and I think we're getting very, very close to a turn in at least some of the cycles.
Okay, you broke up a little bit right before you said, and we also trade. So I'm not sure.
Options.
Okay, but before that you said something else. What's your main markets, Michael?
Futures.
Futures? Okay, cool. All right, Simon, let's go to you. Simon Klein of TradeSmartForex.com. Love that website name, Simon. Tell us a little bit about yourself for those of us who don't know you, and tell us a little bit about TradeSmartForex.com.
Thanks, Dave, and thanks, David, for having me on the show again. It's great to be back. And I started my career straight out of university working for Credit Suisse in both London and New York, and that was in 1996. So that was about 21 years ago. And I started trading professionally in 2005 and started training traders about 10 years ago, something like that. And I put my website up probably around 2.5 years ago. And the idea was, I mean, I'd been training people by word of mouth, but I wanted to have a greater reach and be able to help more traders out there to succeed in this seemingly easy career, but it's simple but not easy. It looks deceptively easy, just like putting your hand out and trying to reach the moon. It looks like you can do it, but it's a deception, yeah? So the point of TradeSmartForex.com, when I started it, is to be able to help traders from wherever they happen to be on their journey move on to become successful traders. So from complete beginner also through to people coming to me for mentoring when they're already on the journey, to help them kind of straighten them out and get them doing the right things, building the correct habits to become a successful trader. So the training that we do, if most people start from the beginning, is to teach people first and foremost how to read the market, a framework in order to read any market once you've got the charts. And that doesn't involve any indicators. The next stage is to take them through the process of learning how to run a trading business, from building your own trading plan, how to build your own trading strategy, and the process you go through with trade logging, trade journaling. And then the final stage of the training would be to work one-on-one with each of our traders to actually build a personalized trading plan fit to their personality and lifestyle. From there, when people go through that training, then they can come into the trading room, or people can join the trading room anyway. I've got some people in the trading room from beginning traders that are actually already making money, which is kind of interesting, who are learning by actually watching us trade live every day. So that's basically what we have to offer people out there, to take them wherever they happen to be in their development process as a trader, whether complete beginner all the way through to even advanced, to help them achieve what they want to achieve in the market to become successful traders. That's the aim. Cool.
You made me think of something while you were talking. The elbow's near, but try to bite it. This was a phrase that I used last week, talking about how it looks a lot easier than it really is. My name is Dave Landry. For those of you who don't know me, of TimingResearch.com. I am a pure technical trader, meaning that I don't factor in any fundamentals whatsoever. I believe that unless you're Bill Clinton, what is the market going up? Is it going down? Or is it going sideways? I believe you can only predict the short term when it comes to markets, and some of my newer clients have confused that with you could always predict the short term, and that's just simply not true. I'm looking for a reversion to the mean, usually in the direction of the trend, and that's just a fancy way of saying I trade pullbacks. So again, you only trade a short term. Unfortunately, short term trading usually doesn't make enough, and something bad can still happen. So I take a hybrid approach to money management, while I'll stay with a portion of the position longer term. And towards the end of the show, I'll give you a link where you can get my books for free, and you can also get a bunch of reports on this. I'll give you some follow-up information too. Barry, let's go back to you next. And the question is, what direction do you think the S&P index will move this week? And the second part of that question is, rate your confidence in your answer to that question by estimating if correctly predicted this week's move. And then in the next segment, if you want to get a chart ready to share, we'll share charts if you want to talk about that.
Okay. Thanks, Dave. So I'm friendly this week, so I'm thinking the market will be up. I kind of almost want to include next Monday because Friday's kind of a throwaway day with nobody there. I originally was thinking there might be just sometimes we might have a congested week, but my cycles are strong Tuesday and Wednesday, and we obviously we're dealing with the Thanksgiving low volume stuff that happened. So I've been looking for at least 2606 on the cash S&P, and then my upper target is 2617, and those are kind of Elliott wave projections. And until they come in, I have to kind of stay friendly to the market and wait for kind of a December pullback. I don't know what else to say. I think my percentage, is probably 62% or something like that.
62%. Okay. Simon, let's go to you next. Same question, and then rate your confidence to your answer by estimating that you have correctly predicted this week's market's move.
Again, you don't need to be able to predict market moves to make money trading. As I always say to my traders, you don't need to know what the market is going to do to make money in the market. You need to know what you're going to do, because you don't have control over the market. The only thing you control is yourself and your actions. But that being said, If we look at the market, and this is when we don't give our explanation, that's the next part, yeah. I would say 50-50. I would say probably higher. And again, 50% confidence in that.
All right. Michael, same question. You know the routine.
I do know the routine. Thank you. I believe that I'm going to go with the seasonals, and I also agree with what Barry's saying as far as the cycles. The cycles continue to point up, and I believe the market will move higher. I also don't really function in the marketplace to say, well, it moves higher, so then I put on positions to reflect that because of the day trading that we do. Can change my mind within a heartbeat, but because I have algorithms that I run and I have signals. But as far as like the broader view, higher, and I'm going to go 65%.
Okay. Well, I agree with everything that everyone said so far, and that's one of the complaints about the show is not enough controversy. I guess we'll get into it one day here, but today's not the day. I think it's headed higher, and I'll share my chart in just 1 second. I'll give it a 65% confidence. I'm not a seasonality type of trader, and I think there's some flaws in that, at least if you're trying to just trade that in and of itself. But around the holiday, markets tend to drift a little higher on light volume. That's just something that I've observed over the years, and it seems to hold true. Also, the longer term trend remains up, and I'll flesh that out when I share my chart segment here. Let's go back to you, Barry, for your answer to the question, which was, you said up. Could you want to share any specific reasonings, or if you want to share a chart, that would be great too. And to everyone else, if you want to get your charts queued up, that'd be great too.
Okay, thanks, Dave. I'll pull up my chart here. Let's see if I can get this up here. So I use Advanced Get, which I've kind of used for about 25 years now. And it usually keeps me out of trouble. I've been kind of looking for this 2606 region on the cash, and I mean for the last month or so I've been looking at 2617, and to me the pattern, obviously when we get into this kind of area, we start getting into this kind of toppy and congestive mess. Sometimes in Elliott wave you get these kind of fourth wave congestive triangles. I mean, if that were the case this week, because nobody wants to take a position, I think we could be between 2565 and 2585 or something, and then by Monday maybe spurt up to this 2607 region. Until the market really takes out 2550, I have to assume that this market is going up. We've been looking for a larger pullback of about 110 points. And the question is, that would kind of match a previous wave, and I'm thinking that will start from 2617. It could start from higher levels if we extend it, but the upper target I have here is 2635. Again, the nature of the way people throw money, free money at the investment bankers, and the only way they can make money because there's low interest rates don't make money for them, is to buy stocks. And so the game will continue as long as they keep throwing free money at the stock market. So my long-term work is higher into next year even. So we're looking at 2750, 2744. I have a cycle high into next June, so that's kind of our long-term perspective.
Barry, do you use some sort of trend filter to help you in your wave count? Is that a parabolic SAR or something I see on your charts? Or
right, I do like the optimized parabolics. Advanced Get has them built in here, and when they do kind of when they do get broken, I do find that there's a problem. In this case, the weekly optimized parabolic, it comes in at 2522, but by then, you're going to miss a lot of the move. We don't like to top pick, but when we see our patterns complete, and when the cycles are starting to kind of get iffier, I'm in trouble. I'm still kind of, maybe somebody else on the show could help me with this. I keep thinking that the budget deficit ceiling is still a problem in December, and I don't know if the tax cut, which is not likely to pass in December, is going to take care of it. And so I keep thinking that maybe that would give us our 110-point pullback. That's kind of what I'm looking at.
Gotcha. Michael, let's jump to you since you're an Elliott guy. You want to chime in on
Sure.
direction?
I actually was looking at Barry's count, and I cannot disagree with it. The count.
Wait, time out. Two Elliotticians agreeing? I've never seen that.
Well, you know, there's a right way and a wrong way of doing Elliott, and when people do it the right way, you have to agree.
Yeah.
So I'm looking at what Barry's work is, and I'm going like, yeah. And I do think that, as Barry was saying, we are very close to the ultimate top. And that's where you start to bring in your cycle work. Because the power of the cycles, and particularly the longer term cycles, can really hold things up. And again, there's many factors, I believe, that are just sitting on that edge. And if one of them tips over the edge, it's going to tip everything with it. But that hasn't occurred yet. So until then, we have to make an assumption that the market is playing by the same rules that it's been playing all along. And as Barry mentioned, low interest rates. And no one's really willing to start upticking those rates. And in fact, when we got the hint that they were going to, and they actually began, the current administration decided, well, we're just going to replace the Fed chief and see what we get, you know, from the next person out.
Yeah, why can't I have all that free money you gave out?
Exactly. I think it could be a very dangerous game to play. But I feel that I've not seen any of the really big players move in and start emptying out positions. I am not seeing any of the big algorithmic players change their basic strategies of how those algorithms are functioning. And I continue to see massive amounts of money being tossed in via just buying equity, just buying equities. And, you know, they hedge back and forth with the futures, but I don't see that that it's getting itself into a position to crack. I think once that happens, then I think we could be in for some serious downside. But until then, I think, yeah, we're still heading up, and I have to go out to the weekly. Now, how I trade that, I trade it day by day, because the intraday play remains the same. We have it where you can get serious rallies, particularly like today. Today, you needed to just walk in and buy it, the Dow and the S&P. That was it. Just buy it. Go do something else. Come back later and take the positions off and have a really good day. Yeah, one of the main things that I focus on, just to kind of toss it in, and Dave, you've heard me say this before, I really don't care about the who, what, where, when, or why. I'm just pure, like yourself. It's technical, and I trade algorithmically. I have an algorithm, and that goes in and does it for me.
Gotcha. Yeah, it sounds like all the things you bring up will work until they don't. But, as long as it's working, don't fight the tape. Huh? Simon, let's go to you next. What specific reasons do you think the S&P is headed higher?
So I'm just going to share my screen with you, just make sure you can see it. I'm sharing it now. You frozen? Okay. So again, the same reasons I've said in previous times on the show. I've been talking about playing on the long side the whole of this year, basically. And you can see there's a point of pause. We're looking at the monthly chart here. Yeah. So we just project like a measure move up, and we're looking for a target area or problem area around 2,600. We mentioned on the previous show. So again, we're in an uptrend here on the monthly chart. We're still uptrending on the weekly chart, and we're not really uptrending. We're a bit kind of sloppy here on the daily chart. You know, moves down, and then we're running up again, and we're running down. So I would say basically, you know, so long as the trend holds on the monthly and weekly, keep on the long side until proven otherwise. We're getting in a danger area where we could actually get a drop. The trend could end on the bigger time frame. So you have to trade with a bit more caution on the long side. But there's no real reason why it can't keep going higher. And again, if you see on the weekly chart here, we're consolidating sideways. There's two types of consolidation markets can make. One is consolidation in price, where you get pullbacks like this. And the other is consolidation in time, where the market goes sideways. And that's much, much stronger when we're basing sideways than when we pull back in price. So when the market here is holding strong for the time being, and if you look on the daily chart, every move down, very, quite sharp move down, gets bought with a sharp move up. So I would say for the time being, if we remain within this range, I think, until we go above and close above the highs here or below the lows here. And that's kind of, we might be setting up for choppy sideways kind of range bound market
Cool.
until we break the highs. So bullish until proven otherwise.
Gotcha. I pretty much agree. Once again, no controversy. I'm slotted as a trend follower. In fact, somebody once called me a trend following moron. I was very offended at the time, but then the name stuck, so I had to get T-shirts and buttons made. And my clients often say they're fellow TFMs, and I just believe in following the trend. Don't try to outthink it. I think eventually it will end badly. In fact, as far as trading trends go, I often say all trends or all trades eventually end badly. In the end, you're going to give up some, especially once you make the transition to longer term trend following. But keep it simple. Notice I've got some arrows on the chart. The only indicator that I occasionally will use is a moving average. And in this particular case, I just put in a 50-day to keep it simple, a 50-day simple moving average, that is. Occasionally, I'll use what's called the bow tie moving average, which I'll give you the pattern for that if you email me, and I'll give you the link towards the end of the show. But notice that we have what I call daylight greater than the moving average, and that's been going on for a long time. And I recently published an article, which I can give you a link to on my website, Proactive Trader Magazine. If you look at the weekly chart, you can see we've had daylight for many years. We had a few bars of daylight in 2015, 2016. I was a little concerned back then. But since the middle of 2016, we've had daylight to the upside. So that's just a little simple trend indicator. Will help you keep you on the right side of the market. If you didn't use anything whatsoever, just look at where the market is and look at the all-time highs. And if you're not too far away from those all-time highs, err on the side of the longer-term trend. Now, one thing I do like right now is there's a lot of fear-mongering out there. There's a lot of people hoping to be first to call the mother of all tops. And again, it will end badly. But in the meantime, just continue to follow along. And hopefully, and I know you shouldn't say hope in this business, but hopefully this trend will go on for a long, long time. The bubble won't pop for a few years. But there's a lot of fear-mongering. Again, people have been calling tops for months. A lot of people called tops last year. The sky is falling. And then so far, this market has climbed the wall of worry. And I've never seen so much top calling lately, but in a major way. Like this is a 30-year mother of all tops, like it's going to end tomorrow. And they've been talking about this for several months. So far, they've been wrong. And what I say is predict early and often, I suppose. But in the meantime, I'm just going to continue to follow along. Barry, let's go back to you. And the question of the week is, what trading investing goals did you set for yourself in 2017, and how close are you to achieving those goals?
That's a good question. I actually, I'm very blessed. My dad is still around, and he has a huge portfolio that's, it's well managed, and it's kind of part of my retirement. And so I've been blessed with being able to stay out of the markets. And as a result, I kind of am more objective about, just seeing what's really happening and not being caught in my own personal kind of trading and my own personal money on the line. So that said, though, I certainly for my clients, I wanted to make 20%, in our ETF ledger, and I think we're only up about 10%. I have kind of, even though I try to stick with the long-term timing as much as possible and catch 6 or 8 week moves on our ETF timer, but inevitably sometimes you get these wild volatility things, and you're just forced to get out and then not get back in again. But my long-term objective status has kept me from turning into a bear, and I agree with what you're saying, David. That I've been watching people call a top to this market since 2011. And everybody has just kind of been eating egg. And back in the early days, we were when Proctor was calling for the market to crash in 1990, I did my long-term cycle research, and I said this market's going to triple into 1997, which it did. It did more than that. We were 2,500 and 1,900 on the Dow, and we went obviously way above that. So I try to keep my long-term work inside, and it keeps me out of trouble.
Yeah, gotcha. No, good stuff. Yeah, I think sometimes people get a little too caught up in their work, and instead of just looking at what is, and that's why I was asking earlier about trend filters and things like that. All right, let's go over to you, Simon.
Oh, hi.
What trading and investing goals did you set for yourself in 2017, and how close are you to achieving those goals?
One of my main goals this year was to help as many people as possible become successful traders. So I've taken quite a number of people on, not a large number of people, and they're now, consistently on the way, either on the way or now consistently profitable traders. So that's basically been one of my main focuses this year of trading live. We've actually, I do some live trading sessions with some of my traders, and out of all the trading sessions we've done all year, we haven't had a losing session yet, and that's
wow.
So that's quite an achievement. But also to watch traders go from consistently losing and turn them around and get them to focus again, focusing on the money when you're trading, or on goals like that are detrimental generally to trading. You want to keep balance. You want to focus on doing what you need to do to become a successful trader. So that's a lot of the, again, that's a big kind of change for many people when they hear that and they think, what, really? And not have to focus on them, because when I started, it was all focused on how much money you're going to make, and and the freedom you're going to have and the lifestyle. But you realize when you begin that it doesn't really, that's really not the way it goes. You generally end up losing money at the beginning. The more you focus on money, the more you lose. And
Amen.
so you have to change something. You have to do something different. So that's why I put this program together, and to actually help people focus on what they need, to actually kind of recalibrate themselves to become, to have that trading mindset that they will do the right thing. And instead of a bit much like dieting, I was having this interesting conversation with someone in the pool this morning, and he said to me, I made a decision to change my lifestyle. I didn't focus on losing weight. I made a decision to change my lifestyle, and I lost weight. So if you focus on losing weight, it's hard to achieve that. You'll go from one diet to the other, much like traders will go from one strategy to the other, and they won't give it enough time, and they won't focus on what they need to become successful. So if you focus on what you need to, focus on perfecting yourself, reading the market well, working on yourself, for example, if you're a trend trader, learning to sit through pullbacks so you can get the bigger move, or adding on pullbacks as opposed to what most losing traders do, or people that never achieve what they need to. As it starts to pull back, they get fear kicks in and they think they're going to lose their profits, and they close a position to watch it go on to much bigger targets. So working with people to be able to help them navigate through that, to do the right thing. And that's really through training, building new habits, and achieving success through that. So watching people go through that development process, that's been much of my focus this year. And to watch people do that, there's one thing for you to go through the journey to become a successful trader, but helping others to do that, there's something much bigger. So that's kind of been my focus this year.
Yeah, once again, no controversy, and I like the dieting analogy. I'll have to use that. I jumped from diet to diet for a while, or throughout my adult life, I guess. And it wasn't until I did just that, I made a lifestyle change. I no longer obsess over food, because I know what I can eat, what I can't, and what quantities, and get a little exercise. But I lost 35 pounds since April. And this was the easiest diet I've ever been on in my life, because I just changed my lifestyle, and I fully agree with that. And I'm going to dovetail in on some of the things you said in just a minute. Before we do that, I don't want to forget about my buddy Michael over there. Michael, what trading goals did you set for yourself in 2017, and how close are you to achieving those goals?
My trading goals for 2017 were basically, I had monetary goals for myself personally. I'm now realizing that I probably set them too low, because I met them pretty early, like mid-year. And going into the fourth quarter, it's been a little bit more difficult. And so, but I still just kind of, you know, the way that I trade is that I have two core positions left. And one is I'm short bonds and I'm long gold. And so part of my objective is to continue to hold. I've been short bonds and long gold all year. And I manage those positions by using ETFs and options. And so that was also a goal, just to continue to build on that position, manage it. And, you know, when the market's going against a short, how do you want to trade it? When the market's going against the long, how do you want to trade? So I kind of learned a lot there, and that was one of my goals. And I've done that nicely, I will say.
Awesome. One thing that I do in my educational business is I do focus a lot on trading psychology, and I'm just fascinated with the subject. And one thing that's sort of difficult as a trend follower, especially in my business, because a lot of your gains depend on outliers, a few big outliers. So it's hard for me to set a monetary goal because I'm not chipping away at it. But one thing, the more deeper I get into trading psychology, and I have what I call a micro course, which is part of a course I have out right now, Trading Full Circle. And I've been working on a bigger course for the last probably 10 years, and it's going to be massive. And back to is keep it process oriented. I wrote a piece late last year, and I'll probably change the 17 to 18. It's davelandry.com/17-trading-resolutions-17. Not sure why it has that strange URL. But if you go look at this, a lot of this, almost nearly all of this, is process. Hard sometimes when the money is not coming in to continue to be process oriented, but that's the only way you're going to make money longer term, is to follow the process. And I know, Michael, you've been on the show quite a few times. I know you have a lot of discipline in following the process. Amen. But, you know, being process oriented is very important. And it's hard sometimes because doing the wrong thing sometimes will make you a lot of money and just aborting the process, but that's not the way to trade longer term. So as far as following the process, I think I did a fairly good job so far this year. Maybe next year I'll try to drop a few less F-bombs, but I've embraced the fact that I am human and that there is emotions in this game. And if anyone tells you that they don't get, in fact, it's been proved you can't make decisions without emotions, they're lying. So, and that was a big epiphany for me too. Stop trying to control your emotions, but embrace them. You know, drop the F-bomb, get mad, and then say, all right, well, let me focus on the next opportunity. There's been times where I've actually been glad to get stopped out of position because I'm no longer staring at it, hoping that it'll move in the right direction. But as far as goals for next year, it's going to be the same as this year. It's simple. Seek excitement outside of the market. Follow the process, and just be willing to take whatever the market is willing to give. And if it doesn't go your way, then stop out and just know longer term you'll be fine following the process. All right, let's go back to you, Barry. Two things. Well, let's go first. Let's do the trade of the week. If you have a trade of the week for us, that'd be great. If not, well, we'll come back to you. But do you have a trade of the week for us?
You know, I don't, because I'm not real happy with trading during the Thanksgiving holiday, because it ends up being kind of a muddle, and suddenly everything kind of happens, you know, the Monday after Thanksgiving. So I actually try to kind of pull in the reins this week. You know, we do short-term trading. We do day trading and on our services, but I don't really have a trade of the week this week. I think, you know, I'm not there yet.
No, that's great. I mean, if there's nothing to be done, you know, I have a trading service, and often there's nothing to do, so I tell people don't do anything. And many years ago, when I was part of a much larger website, the salesman would call me up and complain. It's like, well, you got to recommend something because we're losing clients. When I would recommend stinkers, we wouldn't lose clients. But when I would recommend not doing anything to keep the capital out of harm's way, people would complain. It's just so it just shows you people often trade for action. But no, that's great. Simon, you have a trade of the week for us?
Yeah, I like what you just said, Dave. I completely agree. Sometimes in the trading room when we're running, there's during the times that we're running, there's just no trades to do. So we just don't do anything. We're not going to force the market if there's if there's nothing to do. That would be ludicrous. But that's what a lot of beginning traders do. And once you realize that, you kind of move on. I'll show you a trade from today that we took in our trading room actually. So let me share my screen. And you're seeing the aftermath, but again, learning to trade by saying, buy here and sell there. You can see on the screen. After you've seen it happening is really not the way to go. What you need to do is train yourself to see what the picture looks like before it happens. So here's a picture of the trade when I took it. And everyone in the trading room knows that this was done live. And here's the entry. Entry was here. Stop was down here, looking for a target. It's the first target area into this supply zone over here. So again, that was a trade. There was a whole rationale behind why we did it. It was timed with the yen moving down. If we look at the yen, I'll show you this. The yen was moving down from here. So it was timed to move back down to this zone, and that's exactly what it did. And also timed, if we look at the, I'm just going to pull up the dollar. 1 second. Let me pull it up over here. It's also timed with the dollar moving up as well. So the dollar moving up, yen moving down is a perfect timing to actually go long the dollar yen. Because you long the dollar, short the yen, and that's exactly what happened. So market timing was perfect on that. This is a day trade, yeah? So here's the entry. There's a pullback to a demand area. Turn around. You can manage your risk. I gave it a bit of a wider stop. And if we go and have a look at what the market did, if we go back to the dollar yen, we can see it's coming into that target area. And that's what we do every day when there's something to do, yeah? This is a short-term trade. We take longer-term trades as well. And I'm going to actually show you a trade idea. And this was one trade idea actually we put out. I'm going to show you on the daily chart. We took this trade in our trading room from here. We wrote this one, yeah? And again, we're back down in this. We took it from here. I remember on the Timing Research show and when this was happening in July, yeah? I said, if this closes to the upside at the end of this day, you want to be on the long side. It was a nice run, yeah? And some of our traders caught that. But if we look on the bigger time frames now, I'm going to actually put your attention to this one, the monthly chart. You can see we've got a nice pullback here, new highs, and a pullback here. And we're back into a demand zone on the monthly chart. So I'm looking for a sign of a turnaround here and potentially taking the next leg up. And if this goes and turns from here, I don't know whether it's going to. So I say to myself, if it does this, I'm going to do something. So if it shows a sign of bullish turnaround just like this, and it turns, then I'm going to be looking to this to break above this area and take it up to probably this zone. So that's a trade idea. It's not set up yet, but it's an idea and potential if and when it does what I want it to do to actually take the trade. And that would be kind of a longer term, like kind of swing to long-term trade that we might be in for maybe 6 months or so.
I have a love-hate relationship with the Aussie dollar. It just seems tough to trade, but when you finally catch a trend, it's so beautiful. It's just a friend of mine says you love it and it hates your account. But good stuff there. Do you focus a lot? I saw quite a few hourly charts. You focus a lot on the hourlies?
I've moved. I used to be, when I first started, I was very much of a kind of scalpy day trader. So I would be on the 5-minute and 1-minute chart, and I'd use the hour to guide me. As I kind of have less time for trading now because I'm mentoring other people and I'm running a trading room, so I kind of move on more. I trade more on the hourly chart entries, but trade the daily chart with hourly entries.
Yeah.
So
yeah, your life, that's one of the ironies of this business. It seems like, with the exception of Michael over there, but the longer you're in it, the less you seem to trade, and you really want to think twice. And I know I just used the phrase a minute ago, but you begin to think twice before putting that capital into harm's way. Where early in your career, you just feel like the little rat trying to get the cocaine,
Oh boy, you kind of churn trades out with, wow, I'll just go back to it's funny to think back to those days. As you get on, you take less trades, you make more money than you did with taking many, many trades when you were kind of a younger trader.
Yeah, Pareto definitely comes into play. Well, Michael, let's go to you. And
okay.
Oh no, we already covered that one. So you have a trade of the week?
I actually do, and normally I would say no because of being a day trader. It's like, well, trade of the week, no. But going into, we have a shortened week. I've always kind of had this, I'm not a desire, but I follow Black Friday trading. And I think there's a buildup that's going to come into that. And so I like Amazon. And so the trade is, and so what I tend to do is I look at the probabilities. And right now there's a 50% probability that Amazon, and this is till Friday, that Amazon will trade between 1,013 and 1,126. But there's also a 50%.
All right, Michael cut out again. Michael, you said there's also a 50% probability. That's where you got cut
24.
off.
Sorry?
You cut off. You gave the first parameters for Amazon, and then you said there's also a 50% probability that it will, and that's where you cut out.
Trade between 126 and 1238.
Okay. And then you had did you have an actual trade on that because you were you cut out?
Yes, I then go over and I look at the options. The volatility is sweet right now, and so I'd be looking to you could do something simple like a covered call.
Oh wow, okay.
Or you could put on, using those parameters, put on a nice little iron condor.
Gotcha. Okay.
But I'm saying in the weeklies, in the November 24th weekly, they expire in 4 days.
Oh wow. Okay. Pretty short term. Cool.
Yeah.
I'm not seeing, one thing that I'm not seeing a whole lot of in lately is a whole lot of trades, and that's usually a little concerning. But as long as the market's right at those new highs, I'm not going to get too excited as a pullback player. This is an IPO. There's been an IPO bull market for forever, it seems like. And I'm not a big breakout player, but in IPOs, I have discovered kind of the Will Rogers, if buy stocks that go up, they don't go up, don't buy them. And that's held true pretty nicely in IPOs. So I will actually buy into new highs on IPOs. With that said, without going into a lot of details on the pattern, just to keep it simple, if this stock AQ closes above 1250, it's a little thin lately, so consider yourself warned, worth a shot, especially since the semiconductors have been doing so well as of late. But I'm really not seeing a whole lot of setups, and so I don't have a whole lot of positions on right now, even though the market's headed higher. But I think that stock might be worth a shot, and I think I mentioned that earlier this week and analyze your trade. All right, Barry, let's go back to you. Any closing thoughts about your trading, about the markets, or about FortuneCast.com?
Thanks, Dave. I'm going to just put up our little promo here for you. So we've kind of started this 1 month trial for people so they can kind of watch this for a whole month. We used to kind of do 2-week trials, and so we're kind of doing 1 month trials just so that people can get a longer look at us, and that's available at CommodityTimers.com. We've been very successful over the years, and we're I think in my old age, I just turned 62 this year. I'm starting to kind of getting more seasoned and learning things to do right. but so I do kind of wait for the markets to kind of show me what they're going to do, and I agree with Dave that you should be going with these trends. And a lot of these, we've had some wonderful trending situations, and I think it's a really great opportunity. I think one thing that's actually I'm looking at over the next month still is crude oil, because we closed above that key 55 region. It really is predicting 58 and possibly higher, and to me it feels like the powers that be at OPEC, I think OPEC set their sights for their Saudi Arabian government to work. They need $70 crude, and you better make sure you're going to know they're going to somehow get crude up there to make that happen if they have to start major wars and things like that. So I think we have a lot of exciting things happening, and that's not going to be good for inflation. But stay on top of our latest thinking with our at FortuneCast.com, CommodityTimers.com.
Okay, cool. All right, Simon, let's go to you. Simon Klein, any closing thoughts or anything else you want to tell us about TradeSmart4x.com?
Okay, let me share my screen with you again. So if you want any more information about TradeSmartForex.com, you can go to the website. Just to let you know that you can come and join our live trading room for a 2-week trial at a reduced, it's not a free trial, it's at a reduced cost. I'm not a big believer in doing things for free because I think people are more invested and take it more seriously if they have to invest something of themselves. You know, I used to train people at one point. I did train some people for free and it just wasn't good for me and it wasn't good for them. So again, at a small cost, you can come in and watch us trade for 2 weeks if you want, for a 2-week trial. Also to let you know, if you want to watch me analyze the market in more detail tomorrow, I'm going to do a live market analysis and talk about supply and demand. So you can come and sign up. Again, you can go to my website here, and over here it says upcoming webinars. You can click on that and it will send you to the sign up form so you can sign up. It's the same time, it's 1 p.m. Eastern time tomorrow. Also, we have a YouTube channel where you can actually subscribe to that as well. And I put out, you can see on the blog, I put out a once a week, usually on Sunday, a forecast for where the dollar's going, and we analyze the market. And with the probabilities of where the dollar's likely to go next. Again, whatever you're trading, you need to know what the dollar's doing. It can help you trade commodities. It can help you trade, obviously, the Forex market and futures as well. So, and options, I would imagine, as well. So knowing what the dollar's doing is very important. For example, if you want to buy the euro, for example, and the dollar's hitting a demand zone and likely to go up, then that's probably not timed well. You want it really to buy the euro when the dollar's hitting supply, for example, so you can time it right. So again, you can come to my website, TradeSmartForex.com. You feel free to join our live trading room. There's a lot of free information on the blog. Join the YouTube channel, have a look on Facebook, come to some webinars, and we hope we can help you with your trading going forward. Thank you.
Okay, cool. All right, Michael, let's go to you. Anything else you want to tell us about the market, yourself, or logicalsignals.com?
Well, as far as the markets go, I think just be careful with trading because of the low volume. So if you're day trading and you're just trying to go in and you're trying to scalp, 10, 15, 20 ticks in a particular market, crude or the Dow or even the S&P, thin markets can ruin your day. And because you can get into something and then somebody's got a larger order to do, and boom, it kind of takes you out before you even got a chance of get going. As far as the market this week, again, I really feel that we're going to move higher. So, and I also think that we've got, and a lot of it's going to depend on, and I agree with what Barry's saying, is that you kind of have to go out to Monday because we got to get the results of Black Friday in. And the retail sector, if it's a big Black Friday and people went out and spent a lot of money, we're going to see the retail sector take a jump. And so you could try to play that prior and then realize that you're going to be out of your positions by Monday. Again, like I said, in Amazon, I personally will likely put on an iron condor, simply because I really like, and I sell the iron condor. So because I love to sell volatility.
Okay, cool. Okay, I put together some special offers for people who are watching the show. So if you go to davelandry.com/CFN, you'll get a $100 promo code. You'll get 4 videos, which are part of the Trading Full Circle course. The first 4 videos, I'll give you those free. And then there's, I have a bunch of free reports also, and you could use a promo code to get all 3 of my books. So get to know me first. I do have a paid trading service. And I agree with Simon. I do not have a free trial. I have a reduced rate if you want to come in and check it out. I have a little skin in the game. I've tried giving away for free for a month or so, and nobody ever gets around to logging in or checking it out. But once they pay, and obviously you're not serious about trading if you're not willing to pay at least a nominal amount and check it out. But anyway, but you can get to know me for free. And once you put your information in here, you'll get information about my weekly every Thursday. I don't know my schedule between now and end of the year, but usually every Thursday I do about an hour presentation, and then we spend about a half an hour looking at the markets, and you can bring your questions, and it's interactive. So we'd love to have you there. Without you, obviously, there is no show. But start by going here, DaveLandry.com, CFN. My website, I've got about 500 articles. I think, like Simon mentioned, he's got a YouTube channel. I have a YouTube channel. I have about 1,700 videos there. Most of them are only 1 minute long because I do a daily 1 minute market update. But I do have some more involved educational, a lot of free stuff too on the website. So check out the website, DaveLandry.com, and go here to CFN to get some goodies, get you up and running. I'm going to go ahead and let Dave Kosmider close down the show, but I want to thank you guys, Barry, Simon, Michael. This was a good show. We might have agreed a little bit too much, but other than that, I think this was a good show, and I enjoyed having you guys back again. I enjoyed being back with you guys, I should say. So, David, let's go over to you.
Yep. Thanks, guys. Great show. So, just want to remind everyone to hit the subscribe button on YouTube if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow night, November 21st, 9 p.m. Eastern Time for Analyze Your Trade, episode number 12. Roy Swanson and Dean Jenkins will be on for that one. And to get access to the live event for this show and Analyze Your Trade, you can always go to .com/live and get those links there. And just want to thank my guests again for this episode. FortuneCast.com, Simon Klein of TradeSmartForex.com, Michael Filighera of LogicalSignals.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you.
Thank you.
Great.
Thanks a lot.